Last week, I said that there was light at the end of the tunnel. Now the markets are finally proving it. SPY just closed the week up 3%. But here's the real question. Is this the start of a December meltdown or a trap forming right before your eyes? Let's find out.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
Hey YouTube, Julian here. Happy Thanksgiving and Black Friday to you all. I'll just keep this short so that you can enjoy the long weekend with your family. Now, from what I'm seeing, uncertainty has finally started to cool off. The government shutdown is now over. Trade relations aren't really deteriorating anymore. And we are even seeing some relief around tariffs, especially with President Trump suggesting potential income tax cuts over the next 2 years as tariff revenue ramps up. Tech stocks also posted some solid monthly gains, with Alphabet jumping nearly 10% thanks to the hype around its new Gemini AI model. Now, yes, the fear and greed index still shows extreme fear, but VIX, or the volatility index for the S&P 500, has now dropped to 16, which is telling us that volatility is cooling rapidly. Now, on the macro side, the Federal Reserve is still on track for rate cuts in 2026. The odds for the December rate cut now sits at 86.4%, a very encouraging sign for risk assets. Market closed early on Friday at 1 p.m. Eastern Standard Time, and there wasn't much on the earnings or economic calendar, but it doesn't mean that the day was quiet. In fact, Black Friday turned out to be one of the wildest days for global futures traders. So here's what happened on Black Friday and why the global futures market went crazy. So you see, CME Group, one of the world's largest derivative exchange, went through one of its longest outages in history. And whether you were trading futures, commodities, or currencies, this disruption caused a halt in trading because of a cooling failure in their data centers. And when the cooling goes, the system can't run. So basically, the entire market froze. So let me break this down in simple terms. Imagine there's a playground and there's an AC unit that keeps the place cool. And all the kids are running around together playing. So this is your market, basically traders buying and selling, liquidity everywhere. Now, imagine that the AC suddenly shuts down. It gets really hot and the kids slowly leave the playground because it gets uncomfortable. Soon, there are barely any kids left. Now, a new kid walks in. He wants to play, but he wants someone to trade with, but no one's there. So what happens? He ends up chasing anyone that he can find, even when they are far away. And this is what exactly happened in the market. With liquidity gone, price spiked up and down, spreads widened to ridiculous levels, and at one point you could even see 500 pip moves that make absolutely zero sense. Orders weren't matched properly, stop losses got hit unexpectedly, and plenty of traders either got slippage or couldn't even execute at all. So what do you do in situations like this? Very simple, stop trading. This is exactly what my team and I did on Friday. And when the system behind the entire market is breaking, the smarter approach would be to take a step back, protect your capital, wait for normal conditions to return, which it only did during the New York session. So with that said, let's take a look at the charts to see what's happening to gold. Looking at gold right here, you can see that what happened was that after this breakout actually happened, gold was playing sideways. But as I mentioned in my last week's video, this was actually the final area that gold was actually looking towards heading to. If gold breaks this area, it will likely go downwards. But since it didn't, it respected this support right here. You can see that price eventually broke out of this. And last week, what happened was that it closed above this level of resistance right here. So what this means is that it's clear sign that gold wants to continue its way up. So this is what I see for the coming week, is that most likely gold will actually reverse down a little bit, try to take a pullback before continue its way up. And this will be the final area that it actually needs to break in order to continue its way up. So this is like the final resistance area that it needs to break if it wants to continue creating further all-time highs. So you can see this is SPY, and SPY has indeed been running for the past few days, pushing up all the way from this area right here back to almost its all-time high right now. And I foresee that if this rally does continue, SPY does have a chance to break past this all-time high and continue going up even higher. Now, my target for SPY is around $704 and is actually on its way to the target price that I've actually set. And I do foresee that when the interest rates do get cut, this will actually push SPY up even further and creating new all-time highs for SPY. All right. So as you can see right here that this is the US dollar index. US dollar has been playing sideways for the last few weeks, and I would say that it will continue to do so until a breakout happens. And if we're expecting that the US Federal Reserve is going to cut interest rates, I would also foresee that the US dollar will likely weaken. Think about it this way: money flows to wherever you can get the best return. When the US interest rates drop, US denominated assets like the treasuries, money markets, bonds become less attractive to other investors. Investors will tend to look for higher yields elsewhere. So this will mean that the demand for US dollar will tend to fall, and this will result in US dollar weakening. With that said, let's take a look at the charts and see what's happening to the markets for this week. Let's take a look at Apple. And for the past few weeks, Apple has been playing sideways for the longest of time. Right now, it looks like it is poised to break through the resistance. As you can see right here, price actually shows signs of it breaking above the resistance, indicating that it does wants to go up. Of course, my target for Apple would be 282, which is already almost very close to the current price. And if Apple continues its rally, I would foresee that it will have a chance to push up even further. Next, let's look at Google. As you can see, Google has been increasingly shooting to the moon. And Google does look like it has a strong chance of going up even further due to its very strong fundamentals, especially with the Gemini model that we talked about, and also being invested by Warren Buffett. This all plays a good sign. It also has a chance of being invested by Meta. So this is another reason that Google is really flying, and I foresee that Google does have a chance to continue its way up even further. It might have a slight pullback. It does show very strong signs of it wanting to push up even higher. So here's Microsoft, and as you can see, Microsoft didn't have the best of days over the past few months, but you can see right here that things are starting to look slightly better for Microsoft after it rejected from this level of support right here. It has been pushing aggressively up to this level of resistance, and for it to continue its way up further, it has to break past this resistance, or if it doesn't, when it reaches this resistance and if it respects, it has a chance of going back down. Next, let's look at Tesla as well. Tesla has been playing sideways for the longest of time as well, and it has now also shown signs that it wants to go up. Currently, I don't see it breaking past the resistance just yet, although it does show signs that it want to. I would love to be able to see a strong candle close above, indicating that the price wants to go up even further. And if it does break past this resistance, I would say that it has a chance of going back to this area of resistance. If it actually respects the resistance, it will actually hit down from there. But if it doesn't, and if it continues rallying further, it will actually have a chance of breaking up from this resistance and going to its all-time high. Next, let's look at Amazon. Amazon also does have signs that it wants to rally. As you can see right here, this candle in the last day actually showed that there was a slight small break above the resistance, giving it signs that it wants to continue its way up. Now, if Amazon does continue its rally, I do foresee that it has a chance of reaching this level of resistance, to which it will then decide on what it wants to do, whether it breaks above or whether it respects the resistance and continues its way down back to this level of support right here. Next, let's look at Meta, and as you can see right here, this was one of the areas that I've been talking about. That price was playing within this area, a very, very good area for us to catch some great, entries into Meta. And what happened is that price immediately pushed up from this area due to, good reports. And what's happening right now is that Meta did show a breakout above this level of resistance. This is again good sign if you are a Meta holder, because this shows that Meta wants to continue its movement up to this next level of resistance. So I would say, congratulations if you actually did manage to catch some of Meta at the price of 580, 590, 600, because you are in actually good hands with Meta. Next, let's look at NVIDIA. Again, NVIDIA not having the best of times, is actually playing sideways past few days. And what's happening right now is that in order for it to make a breakout, it has to respect this level of support, as it is about to reach this level of support right here. And it needs to push up and break this level of resistance for it to continue going up higher. Now, with the rivalry between NVIDIA and Google, personally, I see that NVIDIA is still considered as one of the giants, one of the kings of the chip making space. And I do think that while it's good for Google to come in as a competition, I also think that there is a lot of room for Google to grow in order to beat NVIDIA. So NVIDIA should still be a very, very strong competitor and should still be leading the pack. So there's no reason for NVIDIA to actually lose out to Google, since Google is the new underdog right here. So there you go, this week's Thanksgiving and Black Friday update. I told you I'll keep it short, but I still hope that you got some value regardless. Now, if this was helpful, help me out by clicking the like and the subscribe button so that you get updated weekly on the latest market news. And if you want to see how I turned $82 into $10,000 in 2 weeks, then click the video somewhere around here, and I look forward to seeing you in the next video. Bye-bye.